Good morning, guys. You're welcome to my episode 2 of Candlestick. So this morning we're going to be speaking about candlestick formation. In my last video I spoke about candlestick anatomy. I differentiated between the bullish and bearish candlestick. I also highlight the differences between how candlesticks change between time frames. But this morning we're going to be speaking about candlestick formation. We have different kind of candlestick formations, a lot of them, but I'm going to be speaking about the major one you should pay attention to in the forex market, and this major one should be the one to trigger your action in the forex market. So this morning the first candlestick formation we're going to be looking at is what we call bullish engulfing. The first one is what? Bullish engulfing. If you remember in our last class we spoke about the bullish candle and the bearish candle, right? So if you have not watched that video, you should head back to my channel. Bullish engulfing. Then the second one is what? Bearish engulfing. Then we're going to be looking at AMA. AMA is a candle too, is a candlestick formation. Then we're going to be looking at morning star. There's also inverse AMA. Let's talk about inverse AMA in number 4. Inverse AMA. I hope you are seeing my screen. Inverse AMA. So the fifth one we're going to be talking about morning star. And the last one I'm going to be speaking about is what we call the evening star. So these 5 major candlestick formations should be the one you pay attention to in the forex market. Like I said earlier, we have a lot of candlestick formations in the forex market. So the first one is bullish engulfing. The second one is bearish engulfing. The third one is AMA candle. The fourth one is inverse AMA, not inversely. This inverse AMA is inverse AMA candle, just the opposite of the AMA. Then the fifth one is morning star, while the sixth one is what? Is the evening star. So now, since we know that bullish candles are for buyers while bearish candles are for sellers, now let's speak about bullish engulfing. What is bullish engulfing candlestick formation? Bullish engulfing candlestick formation tells us that the market is telling us that okay, the buyers are in the market and they have taken over this kind of position and they are ready to push the market upward. Most times whenever we see candlestick, a bullish engulfing candlestick formation, the market is always pushing up. Not always, most time pushing up. Now let's take a stance of candlestick, a bullish engulfing candlestick here. Now look at this range here. Look at these two candles. No, this white one is a red candle because I had to personalize my own color. This white candle is red, while this purple is for the bull. Candle. This one is for the bear. Can you see this bull candle, this buyer's candle, or the bull candle, which one you can call it, is engulfing this candle. When we say something is engulfing, that means something is covering. You know, if someone is taller and bigger than you, is staying by your side. If someone else is staying by the opposite side, they won't be able to see you because someone who is bigger and taller than you is engulfing you, is covering you. That's just what it means. This candle is doing what? Is covering the low and the high of this candle. Are you getting it? Let me circle it. Can you see these two candles? Those two candles? This candle is engulfing this candle. Then after the engulfing, what happened? The market began to do what? The market began to push up. Right from here, right from the bullish engulfing. That means this candle is more powerful than this other candle. The buyer's candle is more powerful than the seller's candle. That means it closed above this. Then it began to do what? It began to push up. Now we're going to make another example of bullish engulfing. Now this is another example of bullish engulfing. Can you see this one? These two candles. Can you see that? Can you see that this is a bull candle, right? And this is a bear candle. As you can see that this candle is what is engulfing this candle. This bull candle is engulfing this bearish candle. Then after the engulfing, what happened? The market began to push up. This is a bullish engulfing too. This bull candle or the buyer's candle, whatever you can call it, so far it is indicating a buy market, is already engulfing, is covering this one. Then that means that the buyers are in the market and trying to do what? Trying to push the market upward. I hope you're able to understand that. This is another bullish engulfing here. This is another bullish engulfing here. This bull candle is covering this. After then, the market pushed up a little, right? Pushed up right from here to this extent a little before it sold down. I hope you all understand bullish engulfing. If you don't really understand bullish engulfing, please drop your comment in the comment section and I will do well to explain more about bullish engulfing. Now let's go towards bearish engulfing. Bearish engulfing is just the opposite of bullish engulfing. It's just the opposite of what? Bullish engulfing. So now let's look for a bearish engulfing candle. A bearish engulfing. When we talk about bearish engulfing, we're talking about when the seller's candle, that is the red candle, is engulfing, is covering the buyer's candle, and that's an indication that the market is trying to pull down. That the market is trying to do what? It's trying to pull down. And right from here, we can see for me, this is a bearish engulfing for me, because this bearish candle is engulfing all the candles here. It's engulfing all the candles here. This is a doji candle. These are doji. I will still explain more about doji in my next episode 3 about doji candles. This candle is what is engulfing all these candles right here. Then what the market do? The market did what? The market pushed down. This is also a bearish engulfing. Can you see? This market engulfed these two candles. It engulfed these two candles, and what happened after then? The market began to do what? Began to push down. This is under bearish engulfing. Can you see this white candle? This white candle is engulfing this purple candle. Then seller's candle engulfing the buyer's candle. Then what happened next? The market began to push down to this extent. Do we understand that part? So now the next one is what we call hammer. When we see an hammer candle, hammer is telling us that the buyers are ready to push the market upward, and hammer candle is just looks like hammer of what we know. Now a sample of an hammer candle is something like this. Can you see? This is a sample of a hammer candle. A hammer candle is the candle that has a lower wick, and after this candle has formed, that means the buyers are ready to do what? To push the price upward. But after this hammer formed, the price did not go upward immediately. It came down a little bit and did what? And pushed up. Are you getting it? This is another hammer candle here. Can you see? This is a hammer candle. After this hammer candle formed, what happened? The market began to push up. Can you see? It's a candle that has a long wick at the bottom with a small body at the top. Do you get it? So after the hammer candle forms, it begins to do what? It begins to push up. This is another hammer candle as well. This one. This is another hammer candle. Can you see? Hammer candle. Look at the wick. This wick here. I spoke about wick in my last video. If you don't know what wick is, go and watch the video. You will learn about wick. So this is the wick. After this long wick rejection upward, then the price began to do what? The price began to do what? Push up. That's the work of hammer for you. That's the work of bullish hammer. That's the work of bullish hammer. Now, since we understand hammer now, let's go to inverse hammer. Inverse hammer is just the opposite of hammer. That means it is a candle that has a longer wick at the top and a smaller body at the bottom. That's the definition of a inverse hammer. Now, if we're going to be looking for inverse hammer here, we're going to be looking at these three candles here. They bit look like hammer, but they're not completely hammer. But they are showing a longer wick at the top. Can you see? they are showing a longer wick at the top, indicating rejection from the top, pushing the price down, right? Then after this hammer formed, what happened? The price began to do what? Began to push down. This is another hammer here. Can you see a longer wick at the top with a smaller body below it? Then the price began to do what? Because the price began to pull down. That means the sellers are selling the price downward. But this price did not really move downward, just moved to this extent here and began and reversed back. I want us to look for another inverse hammer. I want us to look for another inverse hammer. By the way, this is gold chart. I'm using gold chart as an example. Now we found the inverse hammer. Now this is an inverse hammer. Can you see this candle here? It's an inverse hammer. This candle is an inverse hammer because it has a longer wick at the top. Can you see? It has a longer wick at the top. Then the price got rejected, and then after this hammer formed, what happened? The price began to do what? Began to push down. Just like I said, inverse hammer is an hammer that has a longer wick at the top and a smaller body, indicating that the sellers are trying to sell down and the market is trying to do what? To push down. So that is inverse hammer. Now, what is the next one we're talking about here? We're talking about morning star and evening star. Morning star candles is a candlestick formation that tells us that the buyers are trying to get into the market and are trying to push the market upward. Morning star candles comes with a bearish candle, and indecision candle, and in the next will be what? A bullish candle. Now we have to look for a morning star candle. Sometimes I don't really justify a morning star by the doji or the indecision candlestick at the middle, but now let's look for a morning star. To me, these three candles here, these three candles there is a morning star for me. I'll take it that way because the market is not perfect. The market will not give you exactly a morning star most of the time. This is a bearish candle. This is another candle, but this candle did what? This candle engulfed these two candles there, right? Well, to me, this is a morning star for me. A morning star is a morning star candle is a candle. I think I have to draw an indication here. I have to draw something that to make you understand what I'm trying to say. Let's say this is a bearish candle, right? Then the next candle that's going to form should be a less body candle. Okay. Then the next candle that's going to form should be a bullish candle. Then when this last candle that forms is a bullish candle, then it's an indication that this market should do what? Should push up. Do you get it? That's just how morning star works. And when we talk about evening star as well, the opposite is that whenever we see a bullish candle, an indecision candle or doji candle, if you don't know what doji is, just comment in the chat in the comment section. I'm going to explain what doji is. You see a doji and you see a bearish candlestick. It's an indicator that this market is going to do what? It's going to push down. Do we get it? Now let's look for example of a evening star. A evening star is something like this. Can you see? Something like this. Something like this. Do we get it? Because this candle has formed. 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 Then this next candle just formed, and it was engulfing all these candles there. Well, it's an indicator for me to do what? For me to get in for a sell. I want to look for a perfect evening star for us. Perfect evening star. This is a perfect evening star. Thank you. This is a perfect evening star. This three candlestick is a perfect evening star. Then after this candlestick formed, what happened? This is a bearish. This is a bearish. This is an indecision candlestick, and this is a bearish candlestick. Then after what happened? The market did what? The market pushed down, right? That's just how candlestick formation is. If you don't really understand what I explained in this video about candlestick formation, please do well to comment in the chat box, and I'm going to do and make another video with more illustration with more examples to make this clear. Thank you so much.